Hello again, everybody. Welcome to another episode of Between Two Earnings Calls with Mr. Investor Relations. I'm your host, 𝗕𝗿𝘃𝗏𝘂, and in today's video, we're going to walk through the August 2025 IR job market update. Let's start with a hypothesis, and that's the idea that changes at the Bureau of Labor Statistics were done to let negative job data flow into the market. Since the president has been calling for rate cuts for some time, I think the two dissenting Fed governors at the last meeting who felt that we needed rate cuts were spot on. The idea here is that the job market is struggling, and that if we are to lower rates, we will get an improvement in the job market. I think the data that we show in this video is going to prove this hypothesis true. So looking at the dashboard for August, we had a mixed to negative month. When you look at total opportunities for number one IR jobs, we finished at 11. We were at 9 for the overwhelming majority of the month, and there was still no follow through in the market, meaning no conversions, which shows the market deteriorated further from August of 25. Now, the other key here is if you look at all jobs that I track of different types going back to the beginning of the year, or at least May of 25, June was flat on a year-over-year basis, and each of those other months, we were down 25% or worse year over year in each of those months. And so again, we ended up within the expected range, which is mixed. We were below it for most of the month. Conversions aren't here, and I think this portends a bad job report for August. So what are the key takeaways? Again, August weakened from July. Tariffs are the negative driver here. We were within the expected range, but really below it. Conversions aren't here. We saw a big bump at the end of the month. The market lacks follow through. The data is in line with a weak July, and we think rate cuts will probably help the job market. So we updated this chart to look at it for year-to-date 2025 when you look at conversions. And we are tracking to about 7% for the year, which is more than 2 standard deviations below the mean, illustrating extreme weakness. When you look at it on a monthly basis, there are several periods where we have zeros, especially in 2025. There's 4 months out of 8, so 50% of the time where there's been no follow-through. And the main driver in those periods has been tariffs. And this is where we believe that if we can see some sort of change in interest rates, we think the job market might improve and people might actually see some follow through in the market. So let's get into the month. When you look at all IR opportunities, they were down 33% year over year, but up 10% on the 2-year stack. And again, the strength is at the lower level IR opportunities. Again, we're down from that 32 peak here in July of 25, but we're still above the average. Now, when you look at number one IR opportunities, we were down both 31% year over year and down 31% on a 2-year stack basis, and saw that further deterioration from July. When you look at this on a monthly basis, again, we're in striking distance at 11 of that median number. But remember, the majority of the month, we were below 1 standard deviation from the mean. And so that signals a really weak month. So let's get into the conversion data. And again, the key here is that we've seen 4 zeros, or 50% of the months so far in 2025 has seen no follow through in the job market due to tariffs. When you look at conversions, again, just we're at 0%. Things have been weak since November of 24, or choppy. Now, getting into our Jobalytics and days to rejection analysis, so the key takeaways is the Jobalytics average on the jobs we looked at, we increased from an 87% average to a 90% average. Our days to reject declined from 10 to 8 from July to August. And then days to reject on a workday platform actually increased from 3 in July to 10 in August. And it remains an ABM market. What does ABM mean? Anybody but me. Now, again, looking at Jobalytics, 9 out of 10 times, which was better than last month, we were over 80%. And Aon, one of the highest at 96, was actually one of the quickest rejections. Now you look again at the rejections here. Workday actually improved this month, where the average rejection went from 3 days to 10 days, but we're still seeing weakness and struggles when we use that Workday platform. It still seems to be more of a rejection tool than opportunity tool. Now let's get into the company list. Virta Health, York Space Systems, Figure, Aon, Rapid7, Roblox, Rocked, D-Wave Quantum, Claritev, Lockheed Martin, Brunswick, IDEX, CBiz, Strava. There's opportunities out there. Will you be the person who gets them? And then looking at the data updated here, we're at a 0% conversion rate for the second half of 25, and we were at 9% for the first half, which is translating to about a 7% for the year. Very tough sledding. And to close it out, we're now up to about 579 investor relations opportunities since January of 23, which translates to 26% of New York Stock Exchange listed companies and 17% of NASDAQ listed companies. I hope you enjoyed this report. I think it'll be interesting to see what the jobs report looks like on Friday, September 5th. Thanks for watching.